Time now to check in on some of the business news, and we can begin by looking at the markets. Wall Street finished mixed, the Dow Jones falling for a third day, dropping 165 points after Apple said it would see a lack of production and demand because of the coronavirus outbreak in China. The Nasdaq, meanwhile, finished just above the flat line. That's thanks to shares of Netflix, Tesla, and Google's parent company, Alphabet, all increasing. Meanwhile, Asian indices are all up for the moment. The Tokyo Nikkei up over 1%, Hong Kong up 0.4%, Shanghai Composite 1/3, and the Kospi trading in Seoul just above the flat line at 0.12. For more, let's speak to Han Tan, a market analyst at FXTM. Han, the main topic all week has been the coronavirus, and that doesn't look like it's going to change any time.
Yeah, it doesn't. And if you consider what's driving the gains in Asian stock markets that you mentioned earlier, a lot of this is predicated on the optimism that policymakers, not just in China, but around the world as well, certainly here in Asia, will be willing to step in to support key sectors of the economy. We saw that out of China. We saw that out of Singapore's budget speech yesterday. We are expecting more of the same out of Malaysia a week from tomorrow. So this is fueling the current narrative in the stock markets, and that's why they are willing to push past some of the concerns surrounding the coronavirus.
Now, Han, talk to us about the euro currency. We're seeing it trading at its lowest level against the dollar since 2017.
Yeah, so the euro's fundamentals do not give us much reason to be optimistic at this point in time. Obviously, the coronavirus outbreak has clouded the hopes of a recovery in the currency in the euro that we initially had at the onset of 2020 with the US-China trade deal in mind and with the global economy expected to recover. But for now, given that the data shows that the likes of Germany and the eurozone as a whole is still muddling along, until the eurozone economy can really turn a corner, and until that actually shows through in the hard economic data, we expect the euro to maintain its bias towards the downside against the dollar.
Thank you very much, Han. Han Tan reporting from Kuala Lumpur. Now, as you're saying, the COVID-19 outbreak in China having an impact on the global economy. Massive slowdowns in production in China having serious knock-on effects on global supply chains, with one UK auto manufacturer resorting to extreme measures to maintain output. However, it seems to be a stopgap move at best.
Car maker Jaguar Land Rover could be about to see a major slowdown in production as the ongoing coronavirus outbreak in China causes continued stoppages in local manufacture.
We have flown parts in suitcases from China to the UK just to make sure we've got the right parts. We are safe for this week and we are safe for next week, and in the third week we have parts missing.
China's taken extreme measures to deal with the viral outbreak, including locking down millions of its citizens in areas that have been struck. The center of the epidemic is Hubei province, which is a major hub in the manufacture and shipment of vehicle parts. And as factories remain idle, supplies are starting to dry up, an issue that may yet endure, according to Chinese officials who've warned the effects of the outbreak would be greater felt in production throughout February. Jaguar Land Rover, the UK's largest car maker, isn't alone in voicing concerns. Fiat Chrysler said last week it had temporarily halted production at its plant in Serbia, the first car maker in Europe to do so as a result of the coronavirus outbreak.
The U.S. government has announced new sanctions to step up pressure on Venezuela's President Nicolas Maduro. The Trump administration has already supported his rival, opposition leader Juan Guaido. The U.S. Treasury Department is targeting a subsidiary of Russian oil giant Rosneft for helping to sell and transport Venezuelan crude. Now, the measures will block any asset of Rosneft trading or the company's vice president, Didier Casimiro, that come through the U.S., and it criminalizes any transactions with them.
I'm sure there will be efforts to get around the sanctions. Already, Rosneft is doing this, for example, by changing the names of ships or ship-to-ship transfers to try to hide the Venezuelan origin of oil. The two largest customers for Venezuelan oil are India and China in that order. We will be having conversations with the customers to advise them of U.S. policy with respect to the export of Venezuelan oil.
Time now to take a